Okay, in this homework problem number 3, we're going to do a multi-step income statement. So on your income statement, you're going to look at the trial balance, and the first thing that goes on there is your revenue. So net sales revenue is $233,000, and you're going to subtract your cost of goods sold, which is $104,850, and you're going to get your gross profit, which is $81,550. And let's see, the next thing is going to be your operating expenses, which are your selling and your administrative expenses. So we'll go in order. Selling expenses were $26,900, and administrative expenses were $14,900. And we're going to get a total operating expense, which is $41,800. The next thing we're going to do is calculate your operating income, which is your gross profit minus your operating expenses. So $81,550 minus $41,800. And that would give you $39,750. Then you're going to have your other income and expenses, and that would be like interest expense or interest income. Here it's interest expense, and this is the only place where you will use parentheses if it's an expense, and then no parentheses if it's income. So it's $1,900. So then we're going to get our total other income and expenses, which is just the $1,900. And now we're going to subtract operating income from the interest expense, and that should give us $37,850. Okay, I had subtracted wrong here. I don't know what I had entered wrong, but that's okay because you need to see that I make mistakes too. So I think I've gone back and fixed this number, but that also affected my operating income and my net income. So I had to go back and fix those numbers. So that's the only thing about problems like this. If you do make a mistake on an income statement, it will affect the rest of your income. So on question number 4, these are transactions. These are journal entries, which is definitely good practice. So we purchased inventory on account, so we are getting merchandise inventory, and we are going to debit accounts payable. We don't worry about the discount as the buyer until we pay it. On June the 20th, we paid freight charges of $300. That isn't, as a buyer, is part of our inventory. Anything that we pay to get the inventory delivered to us is included in the cost of the inventory. Return 400 inventory to Silk. So we've returned 400 of this inventory. So we need to reduce the accounts payable because we don't owe it anymore. And so we debit it and we credit inventory because the inventory is being returned. So the account needs to go down. Then we paid Silk Diamonds less the return on July the 14th. To get the discount, we would have had to pay within 15 days. So that would be, we did not get the discount. So first of all, we're going to debit accounts payable for $5,700 minus the $300, so $5,400, and credit cash for $5,400. And there I go again. I subtracted the wrong number. 5,700 is what we owed, and then we returned 400. So that should be 5,300. You can tell it's been a long day for me. I have those days too. Okay, and then on July the 16th, we bought inventory on account. We don't worry about the discount. So we bought it for $3,600. And then we received an allowance from Smith for damaged but usable goods. So we got to keep the goods, but now we have an allowance that we don't have to pay them for the $500. So our entry would be a debit to accounts payable for $500 because we don't owe it anymore, but our inventory needs to be reduced because it's not worth as much anymore. So we need to credit inventory. Then we paid Smith Diamonds less the allowance and the discount because we had to pay it within 10 days. So we did that. So the $3,600 minus the $500 would be $3,100 that we're going to take off of accounts payable. But we're going to credit merchandise inventory for the amount of the discount. We never use the word discount when we're the buyer. And we're going to credit cash for the remainder. So we know that this is $3,100. So I went ahead and did this to save time, but we are going to credit inventory for the amount of the discount, which is $3,100 times 0.01. Here's where you get the 1%. So we need to reduce inventory by $3,100 because when right now inventory is on our books at $3,100, what we owe for the inventory. So we ended up not paying $3,100. We ended up paying $3,069. So to get inventory to the balance it needs to be, we need to credit inventory for the discount. When you're the buyer, you never use the word discount in an entry. To record a discount as a buyer, you credit inventory. You reduce the amount of inventory. For this last part, this is your gross profit percentage, and help me solve this is a great way to kind of see the formula. It'll give you what you need to do. You can press skip ahead. So you can see that you take net sales revenue, subtract cost of goods sold. That's how you always get gross profit. So gross profit divided by net sales revenue will give you your gross profit percentage. So help me solve this is a good way to remember this. So we know it's your gross profit divided by your net sales revenue. And to get gross profit, we would do 9 million. Let's see, net sales revenue was 61 million, so we know that number. And then we need to do, and I paused it again to do these calculations to save time. So I got my gross profit, which is always your net sales revenue minus your cost of goods sold. That's how you get your gross profit divided by net sales revenue. So our gross profit is 40% of our revenue. So that is our gross profit percentage. So I've worked every single problem on Chapter 5 homework. So this should really help you a lot. But please make sure that you're reading over all of your PowerPoint to get a clear picture of the whole chapter. Not just working the homework, and don't forget about working the quiz too.